All right, there we go. Welcome everyone to today's live stream. We got a lot of people in the comments. Love it. Welcome everyone. Happy to have you all here. Welcome back. We had another live stream last week. It was very interesting and a lot of good engagement in the comments for that one as well. Before we jump into the analysis here that we're going to do today on Bitcoin and gold and USD, JPY, we're probably going to look at some Nikkei index as well. Let me first just confirm that the audio is working. So I'm just going to quickly open up YouTube here in a little tab, see if sound and everything is working as it should. Computer is for some reason lagging a little bit here today, so do apologize in advance if it's affecting the quality of the live stream. And if that is the case, then of course just let me know in the comment section if everything is working as it should. Good. So sound is working. Perfect. Audio check. Video check. Water check. Bitcoin. Okay, I can go on forever. I'm not going to do that. All right, guys. So in today's live stream, we're going to talk about Bitcoin. Question that I'm sure a lot of you are asking right now: how far down can we go? Now, I want you guys to help me out here. How far down do you think we're going to go? Okay. I'm going to let you guys think about that one, and I'm going to let you guys answer that comment in the question. How far do you think Bitcoin will go to the downside before we hit a bottom? While you think about that, I'd like to welcome you all to the live stream here with Prime XPT. It's a live stream that we do every Monday, same day, same time, right here on YouTube. Make sure that you hit that like and subscribe, and also hit that little bell notification button as well. My name is Jonatan Randin. I'm the market analyst here at Prime XPT. My mission is to help you understand the markets better from a holistic view using the lens of technical analysis. I am a crypto trader and a forex trader. I've been trading the markets for 10 years, started with Bitcoin back in 2016. Shout out to all the 17 bull market riders out there. That was crazy time, crazy time. I remember late 2017, waking up in the middle of the night to check that. What was that app everyone used? Blockfolio? And you're seeing, wow, that was a crazy time. And we're back with some crazy times now as well, because now we got Trump. That's right. We got Trump. And you never know what the Trump is going to say. Might move the markets. Okay, so what we have right here is we're going to be looking at the Bitcoin. We're going to do a deep dive into Bitcoin here today, and then we're going to look at gold, and then we're going to look at USD JPY, and of course, along the way, I'm going to be pulling up some comments here and help you guys out with everything that you need to know to navigate these markets successfully. Before we do a deep dive on the higher timeframes on Bitcoin, I want to show you something interesting here on the lower timeframes. When I say lower timeframes, I mean anything below the daily, really, because I'm a swing trader at heart. My timeframes, I live on the weekly and the daily. When I go into the daily, intraday price action, for me, that is the lower timeframes. It depends on your trading style, right? You might be a day trader. You might be looking at the daily as your mega high timeframes, and then you'd be looking at your 4 hours kind of, not kind of in between the high timeframes and the lower timeframes. But then if you're going down to 1 hour and lower, that's your lower timeframes. I'd like to stay on the daily and the 4 hour. But of course, some days I get a little bit crazy and I go into the 5 minutes. Anyway, we're looking at the, let's just move on. We got Bitcoin here. And what I'm watching is a type of ascending triangle. What is a ascending triangle? Well, it is when you have higher highs and equal highs. I mean, higher lows, sorry, higher lows and equal highs. And for like the textbook ascending triangle, you have price entering from below, and then it's moving like this. And then about 75% into the pattern, around 75% into the pattern, you tend to get a breakout if you're going to get that breakout. And then target for this is the measured move. How do you calculate the measured moves? Well, take it from the top of the pattern to the low of the pattern, and then you just take that distance and move it up here, and that's your target. Usually what you want to do is you put the stop loss below the last low prior to the breakout. Now let's take that pattern into the price chart of Bitcoin. We've got right here, we have higher lows, and we have somewhat equal highs here. We're about 75% of completion into the triangle, probably closer to 80. So we're getting close to the apex of this triangle. Now, remember what I said in the beginning, right? I said the traditional ascending triangle is when you have an entry from the downside because it's a continuation pattern. It's a bullish continuation pattern. You can have ascending triangles on support of the downtrend as well, just like we have here on Bitcoin. But then the probabilities might change. It doesn't really align with the traditional probabilities as we know with a ascending triangle. However, you trade it in the same way. And this is interesting, right? So we have the price structure of an ascending triangle on Bitcoin right now. And what did I tell you about the measured move? How do you calculate the measured move on an ascending triangle? You take in trading, you can have the price range tool right here. Take it from the low to the first high, right? And one thing you want to do when doing a measured move like this is for a bullish setup, you want to be a little bit more conservative, right? So you want to have the you want to calculate in dollar terms instead of percentage terms, because a percentage term from this percentage term from this level up here can in some cases mean a bigger move in dollar terms. So I can show you both of these concepts. Now this is based on just a simple, let's see if it's based on price or percentage. So it's based on price here. Now what's interesting is, and I'm going to show you what this means. This is important that you understand. So this is the price tool. It's down here. It is called the price range. And you can see right here, this is a move that is a 19.51% move from the downside. Now, when I press Control Copy and then Control V, copy paste this one and then place it above here, you see that it's the same length in dollar terms. The move is $11,692. Same here. But the percentage on this one is 16%, 16.42%. Okay. So it's now based on dollar value, which is the conservative target. Because if I would increase this to 19.51, that would mean a higher target. Okay, so it's important that you base it on dollar value. But then to the downside, you can use the percentage value, because it's seen that price action patterns that is breaking to the downside, a lot of times it reaches the percentage target, because that would also mean a difference in the dollar value. So that is important to note. So this is the measured move target of the potential ascending triangle on Bitcoin. You can go in here and add that as white. Go into the text. Triangle target. Perfect. 82,888. Right. Okay. So we also see here on the stochastics RSI, we had a nice little bullish divergence right here. You see right here, we have a lower low right here on the stochastics RSI. And by the way, before I started doing this, before I started with this live stream, I had started planning for the live stream and I had a big script and everything. And then I figured, you know what? Let's just skip the script. Let's just start with a completely clean chart here. Okay, let's just start with a completely clean chart here. And I'm going to walk you through the whole process step by step. So you can see everything I'm doing. Because a lot of times you see these live streams and people just pull up a chart and they have the drawings already on there and then they start explaining everything. But I find it much more fascinating to follow an analyst's thought patterns from the beginning to the end of analysis. It takes a little bit longer, but you'll learn much more. Okay, so we have a bullish divergence here because we have a lower low on price and a higher low on the RSI. That's that one. And now this, of course, has already played out. But it's interesting observation right here. When it comes down, hits that level, and then you can see on the lower time frames, if you would be watching this on the 4-hour, and you'd be seeing this bullish divergence play out in real time, where do you have confirmation on this? Where does this actually align? Well, what I would say is it kind of confirms on, at least on the 4-hour, on the 4-hour, we have it right here. That candle right there, strong bullish candle. So you come in and you have a bullish divergence on the RSI, and then you end with a strong candle right there. That would be my confirmation that there is some validity to the bullish divergence on the RSI. That's just a quick little note on how you can trade those bullish divergences on price and RSI. Another interesting observation here is if you take the fib from that low all the way up to this high, and then you add the 50%. This is just a 50% fib from the low to the high of this pattern. Where do you have the confidence right here? The 50% level, that is where you also had the bullish divergence coming in on the RSI. So for the day traders out there, beautiful setup right here. Beautiful setup right here where you have on the 4-hour breakout, could have the stops somewhere here, even up to the high. That would have been a 1.78 R win. Pretty good. Pretty good. There's a lot of different ways you can trade this. And the concepts that I'm going to talk to you about here today works in all markets. Okay, so let's remove the RSI here. Let's go back to the 4-hour. Now, this is the ascending triangle target on a breakout. Now, where do we want to have the breakout confirmed? I would want this level here to be, I want price to break above that level, okay? So what I'm going to do is I'm going to put an alert right here. I'm going to go into that horizontal array. I'm going to right click, add alert. Once Bitcoin breaks above that one, I would view that as a confirmed breakout. Either take that as a breakout trade or wait for the break and retest. Still a pretty good setup right here. That's the ascending triangle setup on Bitcoin. Just writing break this level for confirmation. Now what I'm going to do is I'm going to select all of this, go into this object tree right here, going to right click, create a new group of drawings, right click that one, go in, and we're going to write BTC or just sending triangle. And then if I click that little eye right here, everything will disappear. And this is a good way of structuring your chart and your analysis. I'm going to keep that level on because now it gets interesting. Do you see where that ascending triangle target comes in? Well, it comes in right at a very important horizontal resistance area right here. Give me a second. Right, so we're going to be adding that resistance zone here for Bitcoin. Then we're going to be zooming out a little bit. So that low to that high, that is a good resistance zone. So for the ascending triangle target right here, we have a possible local support zone here. And if the ascending triangle confirms with a breakout, a potential target we are looking at would then be 82 point, somewhere between 82.8 and 82.9. And to be a bit more conservative, we could talk about anywhere between 80 and 85, right? And go in and this level would be 80,000. And then we would have 85,000, like that. Okay, so what's important here is, let's remove that now. Like I said at the beginning, I've been doing this for over 10 years now, and I've been studying technical analysis a lot, probably every day during those 10 years. And I still love it. I still think this is fascinating as watching price, and the things that worked 100 of years ago still works today. So we have not sure if you're familiar with the Dow theory, but it's a concept that Charles Dow, by the way, the Charles Dow, the Dow Jones Index is named after him. And many, many years ago, over 100 years ago, Charles Dow laid the principle for Dow theory. And Dow theory is 4 different phases. Those of you who study Elliott wave theory, you will understand this as well. Elliott wave theory came after Dow theory, though. The first phase of Dow theory is the accumulation phase. This is where the so-called smart money is starting to accumulate an asset. And then when price breaks out of that accumulation phase, you enter phase number 2. This is the markup phase, so-called the public participation phase. And it's called the public participation phase because this is where normal everyday people, retail traders, maybe traders like you and me, we wake up and we understand that something is happening. The markets are moving. It's time to act. That's when the public enter. Smart money buys. The public enters when they have understood that the smart money has not bought and the market has woken up. You then enter phase number 3, and also, of course, phase number 2. That's a bull market, a risk-on bull market. And then you enter phase number 2, the distribution phase, right? This is where the smart money starts distributing to retails. This is where the people that bought here, they are now selling. And the selling from smart money, by the laws of supply and demand, creates that distribution range. The range breaks to the downside, we enter phase number 4. This is the markdown phase, or the bear market. It moves down in a sequence of lower highs and lower lows after the bullish trend of higher highs and higher lows. The end of phase 4 is then the entry of phase 1. And so it goes, and so it repeats. This is the underlying foundation for my trading and for what I believe the best way, or one of the best ways to look at markets, because it's easy to understand once you understand the Dow theory. Now, if we look at Bitcoin and we try to apply the principles of Dow theory to this chart that we have right here, we could argue that this is an accumulation phase, right? We can use the fib tool, we can go into range, and we can mark that as yellow as our distribution phase. And then this would then be the downtrend, right? Where we could say that the downtrend perhaps started somewhere around this level. Then what happens down here is we enter the so-called accumulation phase. We're gonna mark that as blue. Now, the reason why I'm outlining this is to try to get an understanding of where is Bitcoin right now. Are we in an accumulation phase or in distribution phase or an uptrend or whatever? And then obviously this is the uptrend. We mark that as green. Then what I'm going to do here is I'm going to mark this as the distribution phase. Again, we go back to distribution, which means this one is yellow or orange or whatever. And then from here, we enter the markdown phase or the bear market as red. So this is what we're looking at right now. Now, again, if we take that Dow theory as we see on this chart right now, it's important to note, as you can see right here, that price action will not always follow the Dow theory or the market structure, the perfect picture Dow theory market structure. But it will show similar characteristics across all markets. And what you need to look at is the higher lows, the higher highs, or lower highs and lower lows. And then put it into the context of, do we have any break of structure, right? So looking at the Dow theory here, we can also assume that looking at Bitcoin's price action from a logarithmic point of view, we are currently looking at the arithmetic chart, which means that each, let me try to get this correctly, it's based on dollar value, right? So if I switch to the logarithmic regression chart, it's going to be basing it on percentage moves instead. So a 10% move will always look the same here as here. If I move it here, for example, that's a 20% move to the upside. It's the percentage won't change, right? And remember when I talked about the ascending triangle before, when I moved the price tool on the ascending triangle, the percentage of this one changed. So you can see right here, I'm going to make it even bigger. This is something a lot of people don't know about, but it's very, very important to know when you're analyzing the markets. Okay, so look at, let me see. Look at the percentage right here. It says 800.94. Okay. Now what happens if I switch to the arithmetic chart right here? Then the percentage is changing, but the dollar value stays the same. And this is a good example of showing the difference between a arithmetic chart and a logarithmic chart. The arithmetic chart stays, every dollar move stays the same in history, but on the log scale, it scales to the percentage of the move. So a 10% move on the log scale is always going to be the same distance on the chart. And this is why the log scale is preferred when doing long-term analysis like we're doing right now. So as I switch to the log scale, it looks like this. Now, it's much easier to see Bitcoin from this perspective and think long-term, right? So now we can actually go in, we can try to figure out where would the bottom be if we assume that Bitcoin is going to follow the same trajectory that we have right now. It's also worth noting that we have a vastly different market now than we had just back in the last bull market and the last bull market high around 2022 because of the introduction of the derivatives market, the options market. That has changed the whole market structure for how big institutions and big players are coming in and buying and then hedging those positions. And that has severely changed the overall market structure for Bitcoin on a deeper, more fundamental perspective because of the financialisation, or whatever that word is, of the overall market. So we're gonna just put a curve on here and try to think like, okay, so if this overall direction of the Bitcoin market will continue somewhere like this in this slope, it would be fairly easy to picture a market that continues down to perhaps the previous range high of the previous accumulation phase. And that's something we've seen in a lot of markets that are inherently bullish in an overall bull market, like, for example, a stock index that tends to continue to the upside. On the longer scale, the S&P 500, for example, this tends to be in a bull market. And so a lot of times we see that the accumulation phase leads to a bull market, to a distribution phase, to a bear market, and accumulation happens most of the time above the previous accumulation. So where is the previous accumulation? Well, the previous accumulation is right here. So if we extend this range to the right, we can see that somewhere above this range is where I'm looking to see a type of accumulation pattern to come in. Now, this does not mean that it has to be on the previous range high. All it means is the overall mean price of the next accumulation should be higher than the mean price of the previous accumulation. Now, when I say mean price, basically what I mean is the average price of that range. So if we have this structure, we might look at something like this. Break out of the ascending triangle, hit that level we talked about in the beginning, move down, hit the next support, up, and then perhaps, that capitulation move to the downside, start trading down here. Something like this would not be impossible at all for Bitcoin. So this type of structure is what I'm looking at for Bitcoin going forward. It might happen at 30K, it might happen in 25, it might happen in, I don't know, probably not lower than 15K is what I'm thinking. Now, there are some analysts out there talking about 10 to 15K, which I think is very low, right? But again, like I talked about, the introduction to the derivatives market and all of that has changed the whole market structure of Bitcoin. We're not looking at the same market as we did in the past. We have a completely different market, which might mean that we're going to have a completely different structure going forward, and the bottoms and the tops and the cycles might look completely different in going forward in the next 10 years than what we've seen in the last 15, 16, 17 years or so. Right. Okay. So that's Bitcoin. Looking at that now, what I'm wanted to share as well is, if you're a trader, this does not matter. Okay, Bitcoin going down to 5 or 10K, it doesn't matter if you're a trader, because we're going to be trading those moves anyway. Doesn't matter if Bitcoin is trading at 1 million or 5,000. There's still opportunities to be traded, and that's the mindset you have to be. Okay, yeah, you have to have that mindset. You need to understand the type of thinking. It's a trader's mindset. So that's the overall analysis I wanted to show you guys on Bitcoin. And if we go back to the 4-hour, that ascending triangle, this is something that I'm going to be watching throughout the day, or perhaps even throughout the week. Now, let's move on to gold. Now, on gold, we have something interesting. We have the ascending triangle here on gold as well, very similar to Bitcoin, but this one obviously is failed. But of course, if we adjust it a little bit, like what you have to do with trend lines, sometimes you have to adjust the trend lines, we can see that it might be trading somewhat within that ascending triangle still. But what I want to do here is I want to let me just move this to the 4-hour. And then what I want to do is I'm going to zoom out a little bit, okay? We're going to be starting with looking at the weekly chart here, okay? So is the overall trend still intact for gold on the weekly? Yes, I would say that it is still intact on the weekly time frame. What's interesting here is we have a strong wick to the upside, a strong wick to the downside on the weekly. It's a clear sign of very indecisive price action right here on the weekly, but we can safely assume that yes, the weekly time frame for gold is still very, very bullish. Now let's zoom into the daily. What about the daily chart right here? Well, I would say that the daily chart still is very, very bullish. I think we can look at the high here for gold, and then we have a higher high right here. But it's important to remember that we also had a higher high here as well before we had that explosive move to the upside. So just because we get one lower high does not mean that the structure is broken, because almost every time before you break into a new high, you're going to get some type of price action that might tell you that you have potentially a lower high. Because if price breaks out like this, is this really a lower high? No, we are looking at this as the move, and then that creates one move towards a higher high. So we need to be a little bit forward looking as well. We need to, when we're looking at charts and we're doing technical analysis, we can't just only look at the current candles, although the current candles are the most important candles, but we need to look to the right, not just to the left. Yes, we are doing technical analysis. Yes, we should be looking at past price action, historic price action, because that kind of dictates the probabilities of forward projections, right? But we also have to think, what is there to the right side of the chart? And what if price moves down here? What if price moves up here? What will this current candle tell us if that happens? So for gold right now, what we can say here is that we had a blow off top. Okay, we had insane interest from institutions, governments, retails. Everyone just piled into gold, and then boom, we had a blow off top. The biggest correction, I believe, in the history of gold, or at least the second biggest. But what did we see here? Well, we did see a huge demand coming in, right? We had previous all-time high level confluent with that huge candle as well, which at the time thought that was a big one, and then we got this, right? But it shows us that still a lot of demand for gold at this area. People are still interested in gold and want to be buying gold. And this brings me to the 4 hour, where I'm actually seeing quite interesting type of price action here. And if I add the 4 hour here, add back the ascending triangle, what you're seeing here is a failed triangle. But when it comes to trend lines, you really need to be open to the idea of adjusting the trend lines quite often. Horizontal levels, you almost never have to adjust because they stay as they are. But trend lines, the name implies that it's a line identifying a trend. And the nature of trends are very fluid. They can change with time, just like what we had here on gold. So what we should be doing here for this trend line is remove that blue one, and then we should be adjusting this trend line, perhaps like using the candle closes here, and then the low of that one, and that brings us a trend line that looks like this. And now all of a sudden, this still looks like a potential ascending triangle, right? Because when you're adding trend lines, you can't expect them to be perfect. A lot of people say, like, are you using the wicks or are you using the candle closures? I don't really care about that. What I care about is I'm trying to get a feeling for what's the overall structure like. Yes, this wick goes below the trend line, but does it really matter? Of course it doesn't. What matters is the overall structure of this pattern. The overall structure, not the exact price levels. So what we have right here is what I believe to be still a potential ascending triangle for gold. So definitely very interested to see how this plays out. We have that critical low time frame support level at 4,878. And if this holds, then I believe, and if this trend line holds, I believe this triangle is still very much intact. But it's also important to note that we are getting that bearish retest of that upper triangle right there. But the measured move remains intact if we get that breakout. And I do have my alerts for that potential breakout right there. Let's quickly look at the RSI. Let's look at the lower time frames here. So I would like the RSI to be a bit higher here. Yes, we have reclaimed the 50% level right here, but it looks more like it's kind of using this general area as resistance right here. And like I explained, I hope you're following the blog on PrimeXPT Research, our blog, where we're posting daily technical analysis articles every morning, every day. I'm posting technical analysis, and this has been one of the pairs that I've been following very close on a daily basis. So if you want to get my ideas on the probabilistic outcome on some of the most popular trading pairs, including Bitcoin, gold, Euro USD, JPY, the Nikkei, the S&P 500, all of that, go to the make sure you do check out the blog. And we also have in the mobile app every day, we have that article being listed in the mobile app as well. So make sure that if you don't have the app, go and download that one right away and go to primexpt.com and check out the market research tab. In one of the articles I posted on gold recently, I've talked about the I believe it was the Cardwell range theory on the RSI. Talked a little bit about that. And usually, in strong bull markets, you see the RSI is ranging above the 50% level, right? And you can see right here, you have for most of the time within this whole move, you have the market when it's looking bullish, and when it's bullish, you have the market most of the time trading within this range right here, and only occasionally do you get moves down into the lows of the RSI. And by the way, in a bullish market, the moves down to like between 40 and 30, like below 40, that's oversold. So you're not really going to see those insane oversold levels in a bull market. This is still quite oversold, and there's not really much about being overbought in a bull market. It just shows that there's strong momentum, right? But you can see that overall we've been trading in this area and just had small dips to the downside. But what we're seeing here is we have that dip, but then price never really recovered into this range again. It's kind of resistance at the 50 down, and that's like hovering around the 50% level on the RSI. So I'm not really liking what momentum is telling us here. There's not a lot of bullish momentum here. But if we do break above that ascending triangle, then at that point, most likely momentum will shift, and we're going to get more people, more bulls coming in to defend gold at this level. Right. Okay. So now I want to cover one thing here. One thing with gold is the break and retest idea here, because what we're looking at basically is there's two ways to trade a breakout like this. You could either trade it like a breakout or break and retest trade. Now, how do you trade it as a breakout? Well, you can simply wait for a breakout and then buy, or you can have a limit stop order or a stop buy order. Basically, what that means is once price hits that level, it activates a market buy order. So you can have that something like this, right? Or my personal favorite is the break and retest. Let me get a chart up here. I can show you exactly what that is. This is the principle of the break and retest. What you have right here is an uptrend, and price hits resistance right here, hits resistance once again, and then it breaks out. This is when the bears, they give up, the bulls take control, and you flip this level and you retest it right here. This is a break and retest setup in an uptrend. You hit resistance, break above resistance, come back down to test the resistance level, and that's where you had the successful retest. And the more confidence you have on this retest, the better. So for example, you can see right here, horizontal support and resistance flip, that's called the polarity. We're going to look at on the USD JPY. I'll show you the idea of horizontal support and resistance polarity as well. You might want to be adding the Fibonacci retracement level. Maybe this level is confluent with the 0.618 or the 50. And then you might want to be adding the some type of EMA support. Maybe you have RSI in the oversold region right here. And then, of course, you can also look at maybe a bullish candlestick pattern like the bullish engulfing candle on the level. So the more type of confluences you have from price action indicators on the retest, the better. And that is my bread and butter setup when trading all markets. And that's what I'm looking at here on, looking forward to on gold as well. Now, let's move on to USD JPY. And then I want to show you the idea of polarity within horizontal levels. And this is fairly simple stuff. But if you're completely new, you might appreciate this. What we're looking at here is a green uptrend. You're coming up, you're breaking above that resistance, forming one top, hits support again, forming another top, hits that resistance. This is a double pattern, a double top pattern with the first top here, the second top here, and then you have that neckline of the pattern. And this is the idea called polarity within support and resistance. And that means, polarity means that a resistance level that is broken to the upside is most likely going to be used as support on the retest. Very, very simple stuff. But whenever I talk about polarity in price levels, that's what I mean. The idea that support and resistance depends on where price is in relationship to that level. If price is above, then it's most likely going to be acting as support. If price is below, most likely it's going to be acting as resistance. Okay, now let's talk a little bit about USD JPY and the Nikkei, because I am or have been working on this idea now for a while. Where do I have the levels? Is it this one? Let's see. No, it's not this one, but this is actually the correlation chart. So we want to look at that one a little bit later. Let me add the Nikkei here. We're going to be checking this chart in just a little bit. Okay, so this is USD JPY. Where do we have all the levels? Do I have any levels on here? Let's see, where is this even the right chart? No, I think this is the one. Right, here we go. So what we have right here is a market that I believe is quite oversold at the moment right here. We have a huge move to the downside on USD JPY, moved back up and had a heavy rejection right here around the election in Japan. As you guys might have heard about, we had I'm not in Japan, but we as citizens of the world, we had a new prime minister in Japan getting elected, and that really shook the whole markets, and we had insane volatility on USD JPY and yen related pairs, as well as the Nikkei, the Japan 225 traded on prime XP as ticker Japan. And that's what this idea is pretty much based on. The disconnected correlation between the two. So what we have here is USD JPY. I believe it's quite oversold right now, and we're forming a potential bottom formation right here. Let me see. I do think we have. Yeah, what I'm looking at right here as well on the RSI is we have definitely bullish momentum coming in here on RSI. We have bullish divergence on RSI as well. One thing that is worrying me a little bit about this is the fact that OBV is still trading to the downside. I want to see a shift of OBV here. We do see that we have somewhat of a local breakout right here, but I think we can even increase this resistance zone a bit more like that. And what we do need to see is sort of a break above this level. And then I'm looking for a retest of this level, or move up to the local reload zone marked with a number 1 right here. That local reload zone measured from this high down to that low aligns with that descending trend line here as well. So I think that is a wonderful wonderful setup, and I'm just waiting for that breakout. I'm going to put an alert right there, waiting for that breakout. Now, what I wanted to show you is there is a relationship between USD JPY and the Nikkei, right? So that's the relationship I'm showing right here. So you can see the USD JPY in the white line, and then the Nikkei is the blue line. The Nikkei is the Japanese stock index. That's the 225 biggest companies listed on Japan stock index. It's listed as just Japan on Prime XPT. As you can see right here, we have a inverse correlation right here. USD JPY is trading down here, and the Nikkei is trading up here. If USD JPY moves up to the short reload zone, Nikkei probably going to move down. When I'm going to buy USD JPY on the breakout, I'm going to sell USD JPY up in that reload zone. And when USD JPY hits the reload zone, I'm thinking there's a probability that the Nikkei is going to be hitting a support. So that's what I'm going to be looking at now. Go to the Nikkei here. And this is the setup I'm watching. If you're wondering why it says 5 days here and 10 days here, it's simply because I've been calculating what is the average time that the USD JPY pair and the Nikkei index moves this distance. And it would take, looking at the average travel time for USD JPY, it would take USD JPY somewhere between 5 and 10 days to move this. So I'm thinking somewhere at the end of February, at latest, it's going to be hitting this level. And if I calculate that on the Nikkei, I'm thinking somewhere at the very latest, end of this month, Nikkei might be hitting this support zone. And at that point, I would then be looking to enter a long here, a buy the dip opportunity. All right. That's everything that I wanted to cover today. We covered Bitcoin, right? We covered Bitcoin. And what did we learn from Bitcoin? Let's go back and we can take a look at it. What we talked about here is we mostly looked at the ascending triangle on the 4 hour. Keep your eyes on the breakout above that resistance zone on the 4 hour. That would be the level around the 71K. So 71 to 72K, check that level for potential breakout. We got the ascending triangle target is going to be somewhere between 80 and 84, 85. And I believe that is going to be a, not the bottom. I don't think it's going to be the bottom. I don't think we're at the end of the bear market, but it is a potential tradable opportunity. Now, of course, do your own research. Do not follow my ideas. You need to base all your trading on your own ideas. But what's interesting here is if you're applying the Dow theory to the price chart here of Bitcoin, we are looking at a potential accumulation range lower, far lower than where we are right now. Potentially even looking at prices that is maybe 50 to even 60% lower than where we are currently. And then we looked at gold. On gold, we talked about the ascending triangle here. We adjusted the trend line a little bit here and came to the conclusion that, yes, it does look that the ascending triangle could still be valid for gold right here. The level that needs to hold for this to be true is this trend line right here, and a break above 5,111 could potentially activate the measured move target at around 5,500. Around 5,500, the previous all-time high. And then we looked at USD JPY and the inverse correlation with the Japanese stock index, the Nikkei. I want to go long on USD JPY in the next days. And I want to be holding that for about 5 to 10 days. And when I sell that position, I'm looking to get into a buy the dip opportunity on the Nikkei. And I would think it might be happening in 5 to 10 days on the Nikkei, which has been very, very bullish lately. All right, guys, that's it for today. I would like to thank you all for joining. If you like these live streams where I'm combining some educational and live analysis with educational content, make sure to let me know in the comment section. Thank you all for joining, and I hope to see you all in the next one. Take care.